Hey there, hope you're well. Kelly Construction, nice to see you. Nice to see you guys joining. So, what we're talking about tonight is an important one, and there's going to be a Q&A afterwards. So, start putting your comments down if you want to have a question. But what I'm going to talk about to begin with is just how a business owner, whether that's a person who's in the trades, who's in construction, or a person who buys stuff and sells it, whatever, they're out there, they're making a good profit, but they work long hours. And if you are working out there, if you're trading and you have a good business and if it's making good money, you're making a nice profit. But what you're going to be often very conscious of is the fact that if you were to stop working, like say you go on a holiday for 2 weeks or something like that, if you stop working, then does the business produce money, or are you required to be there full time, delivering services in order to actually make a profit? So you see, it's great to make a profit and to be doing well for a couple of years, and you build up a nice steady flow of business, and everything's going really, really well for you. And then all of a sudden, what happens is you suddenly realize, God, this is a grind, and I want to kind of slow down a little bit. So, what do you do when you want to slow down a bit? Like that's essentially you're sort of starting to kind of think about easing back. Like if you're for one thing is for sure, if you were working on sites as a tradesperson or anything like that, you're going to be very well aware that it's hard going, and the end of 2 decades of that, like you're ready to hang up the boots and do something different. So I've worked with quite a lot of clients, and I'm working with clients that are in construction and stuff. And the reason that they join is because they recognize this issue and they're looking at, how do I get out of the day-to-day grind? I mean, I like my job at the moment, but I want to have an option. Like, what are my future options going to be if I was to just sort of ease back from the day-to-day grind? And that's one of the reasons why I think building a property portfolio, a lot of people think that I'm just always going on about the same stuff. But the reality is a property portfolio is one of those few things that you can step back from, and the income continues to come in. So it does allow you a high degree of freedom. You can have a property portfolio, the income's coming in, whether you're working or not, the income's coming in. You can be away in another country on vacation. You can go and put a manager in place to kind of manage the properties and things like that. Like it does give you a good degree of freedom. And so one of the things I was just going to talk about is how to go about that. And a lot of people make the mistake of thinking that building a property portfolio is this like impossible dream, that it's like way too ambitious to build a portfolio that would completely remove all of your day-to-day salary and things like that, that you'd actually completely replace it. And that's one of the things that is quite easy actually in property. Well, I don't want to say it's easy as in, you can go out there and just anyone can do it, but if you know what you're doing, you can go out there and you can actually build yourself a robust portfolio that produces a steady income. um, you do have to manage it, and you do have to kind of watch it every now and then, but it doesn't require 8 hours day to day work, and you can step back from it quite a bit. One of the biggest things to do is obviously you've got profits coming into your business. Though, what do you do with those profits? You can take it out and you can buy other businesses. You can take it out, you can invest it, you can buy, you can obviously fund your lifestyle and stuff like that. But what you really want to be doing is building up some sort of a nest egg. Now, some people will go off and invest in the stock market, but I know from the feedback that I've heard from a lot of people that they just don't trust the stock market. And like there'll be other people that will be perhaps a little bit more sophisticated and they feel like the stock market is perfectly fine investment place. But there are some people out there who just don't like the intangible nature of the stock market. You go out and take 50,000 out of your company's bank account and you say, right, let's go and put it on the stock market. Unless you know what you're doing, you could find that that 50 grand has disappeared very quickly. And so, at least with property, if you're in a trade, or if you're a business owner that is in any way linked to the property industry. So if you're a tradesperson, if you own a company that supplies anything to the property industry, so like if you're a decorator, or if you're doing any of that kind of stuff, if you're selling things that people need for homes and stuff, you're very familiar with property, with either residential or commercial property. And if you're able to sort of get close to property, then you're familiar with it, and it's a little bit easier. You kind of think, if I took 50,000 out of my business and put it down as a deposit and got a mortgage, I feel comfortable with that investment because I can see it, I can pass it, I can have a say in who's renting it from me, versus if you put it in the stock market or something like that. Like, you don't know what's a good company to invest in, all that. Now, there are people who do very, very well in the stock markets, don't get me wrong, but the stock market can be a gamble at times, especially because it is so volatile compared to the property industry. If you look at property prices go up and down over, we'll say, a 12-month period. You would notice the difference. But in the stock market, you can wake up one morning and it's down 10%, and by lunchtime it's back up again. And because of that, people can be very, very emotionally distressed when they get involved in investing in the stock market. I know people that have done this, and various other sort of assets that move and fluctuate very quickly. If you're able to see and track the price of something on a phone or an app on a screen or something like that, that makes you very, very susceptible to emotion. And I've seen it before, where when things are going up, you feel amazing. You kind of think, geez, why don't I go and put more money into this thing? And then when it turns around and starts going downwards quickly, suddenly you're panicking and going, I got to sell, I got to get out. And the thing is the property market goes slowly, so it doesn't give you that same sort of rush. And because it doesn't give you that same rush, you don't respond in the same kind of rash way that would make you do things kind of without realizing what you're doing. I've seen it before where, people buy crypto and it's up, 25% on the day and things like that. That is, if you're a very, very stable, mature investor and you're able to tolerate those kind of wins and losses, then that's great. But the vast majority of people just don't have that kind of mental sort of strength to see your stocks going down, or your investment portfolio go down. Your investment portfolio goes down 50%. Yeah, so big deal. Yeah, I know it'll come back. Most people, if they saw that, they'd be on the phone, sell, 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 and just get me out as quickly as possible. There's panic sets in. So that's something. If you're going to get into buying property, you obviously have to start to understand, like, what is the best strategy to go for. And a lot of people don't realize that there's a lot of strategies out there. If you're somebody who works very long hours, let's say you work as a solicitor or as an accountant or something like that, and you have clients that are coming in all the time, so it's like a constant stream of work. You obviously have plenty of income, plenty of professional income coming in because you've got a lot of work, but you don't have a great deal of time. And that's one of the big complaints that I see from friends that are in those professions, is that, they have lots and lots of income coming in, but they have almost no time at all. So that requires, if you're going to invest in property and that's the type of business that you're in, then that is going to point you down one path. It's going to be quite different to if you are from, say, a construction background and you're able to go in and you're quite handy. You can actually go in and start tweaking and extending and improving a house with your own hands. If you've got spare time to do that, you can obviously add substantial amount of value to a property with your own, just by doing it yourself. And if you do it yourself, you're not paying a huge amount to other people. And so there's opportunities there. So that would be the strategy for some people. But then if you look at professionals, there's professionals out there that, for example, we talked about the solicitors and the accountants. Those guys would have a specialism in, for example, creating a tax strategy that might be very suitable. There will be other people that can come up with a legal strategy that will avoid either taxes, or it'll structure it in such a way that you save a load of money. And then there will be, I've seen, architects and stuff. In my case, the first deal I ever did was, I mean, it was a bit of a fluke, I'll be honest, but I bought a small piece of land in the west coast of Ireland, and I bought it for 25 grand, and I got planning permission on it to build 4 small houses on it. And when I went off to see if I could get a price from a builder to build the 4 houses, the builder turned around and said, I'll just buy the site. Now that you have planning, that site's worth 125 grand. So suddenly a light bulb went off in my mind. I went, hold on a sec. I bought it for 25, and just by getting planning permission, it's gone up 5x. Suddenly I had 125 grand. So that was a real wake up moment for me when I suddenly went, whoa, like property, wow, you can really make money quickly in property depending on your strategy. So identifying the strategy, figuring out what's the one that works for you. And I mean specifically for you, based on your knowledge, your skills. And I do mentor people who want to do this kind of thing. And usually they're far enough along in their business that their business is throwing off a decent enough profit that they're actually able to take a lump of cash out of their business and start building a portfolio. And those guys usually ask me, can I become their mentor and do this kind of thing? And when I do that, almost always I'll sit down and I'll work out, okay, what's the best strategy for you specifically based on your knowledge and stuff. Give you a good example, how different it is for everybody. I met with somebody recently who works in the motor trade, and he has a property that he's been in for years and years. And he was asking me, like, what could he do with it? And it was just like, I could see instantly, because I'm in the property sector, I could immediately see all these angles that he had open to him. But he had absolutely no idea that all of these were potential options. So it was really, I mean, it was actually great being able to explain all this kind of stuff and say, listen, if you do this, this is going to happen. If you do that, this is going to happen. But it really surprises me sometimes that the stuff that I take for granted because I'm in the property industry for 30 years, most people don't have any idea that this is possible. And so that is one of the reasons why it pays to go and get yourself educated in property, so that you know the angles, you know the structures. For example, I hear the question all the time, should I buy the property in my personal name or should I buy it in a company name? And you might sort of say, oh, well, it's an easy answer. It's not an easy answer, because it all depends on what your strategy is. It depends on how much property you intend to buy. Is it just a one-off, or is it going to be several? If you're going to be buying multiple properties, then it would make sense to create what's known as a holding company structure. But like, all of that stuff comes after we figured out what the strategy is, not before. So like those guys that we used to joke about, these guys that are, they want to say that they have started a business and that they're now a business owner. And what's the first thing they do is down to snap printing to create a business card and a letterhead. And like, they don't even have a customer, but they do have a business card and a letterhead. And like, the business hasn't begun just because you have a business card. The business happens when you have a customer in the door. And that's one of the reasons why structures, tax, whether it's tax or legal structures, all that follows the strategy, and it follows your long-term plan, what you want to do. So clarify what your strategy is going to be. There are so many strategies out there, like literally dozens and dozens, and it's really just down to you figuring out, like, what is your strength, what is your weakness, where are you going to go and put your time and effort into this thing. Once you've got that figured out, then you start going down the road of, okay, what's the best structure? Do I want to have partners in this? Do I want to have investors? How much money am I putting in? How much do I need to borrow, if I'm borrowing anything at all? Do I want to put it into a pension structure? Like, pension structure is a very, very valuable thing to look at, and especially if you're kind of the owner of the business. And the reason I say that is because when you own a business, you can take the profits out of your business and you can put them into your pension completely tax-free. And the business also reduces the tax that it would have had to pay on that money. But when it goes into your pension, you don't have to pay any tax on it. If you go and rent the property, no tax. If you sell the property and make a big profit, no tax. So it's a great way to kind of quickly build a portfolio if that's what you want to do. But then again, people would say, well, what if I want to go and take out a load of cash for my lifestyle? Well, then pension is not for you. So that's why you need to understand what is it you're hoping to achieve and build a strategy around your end goals and your skills and your strengths and weaknesses. Now, getting money for property. Obviously, if you're a business owner and you've started the business and it's producing like a reliable sort of income that's coming in all the time, you're going to build up some savings and you're going to be able to park some of that stuff straight into like a big, we'll say a lot of people will straight away look at residential because it's so accessible. But residential property is, because it's so accessible, there's a huge amount of competition for it. And the competition is from people that are out there trying to buy a home. You're not just competing with other investors. You're competing with people who are trying to buy a home for themselves. And so that makes it a fairly difficult place to find value, certainly in this market at the moment. Now, there is exceptions, but it is always a situation that you're kind of competing with others. You can go out there, and whilst at the moment, at the moment we're in June 2025, like you go out there, there are properties for sale that are going for 200 grand, 300 grand over their asking price. That is because it's a residential property. And at the very same time, in this exact same market, you can go out there and you can buy a commercial property that might be on the market for $1 million, and you might be able to pick that up for 400 grand because there's absolutely no buyers in the market and the guys are desperate to get rid of it. And like that's the thing to be aware of, is that just don't assume, one of the reasons why I set up my mastermind was because having a small little community of investors is the best way to find out what people are doing out there. Because if you're living, if you're basically going to work, coming home, speaking to your better half, having a chat with your friends and stuff, and nobody does property, then you're in a little bubble and you will know nothing about anything to do with property. You won't know how to do it. You won't know who's buying what, where the value is, what's the mortgage rates, all that kind of stuff. You'll just be kind of clueless about this stuff. So try to get into a community that allows you to understand what's going on, who's doing what. Like there's an awful lot of really, really interesting strategies out there at the moment that I didn't know anything about until I brought some of the guys into the community and I said, so what do you guys do? And they're saying, oh, we're doing this and we're doing that. I said, well, really? I had no idea that was even a thing. Interesting one. My podcast last night, I interviewed a guy, and this is a real name drop now, but I interviewed a guy. The podcast that comes out next week, but I interviewed a guy who has just purchased Kanye West's Malibu Beach mansion in California. So those of you who, I followed this story, I can remember when it came out because I'm in the property circles. But Kanye West, the rapper, he bought this property on Malibu Beach, designed by this famous Japanese architect, and the property, he paid $56 million for this concrete, really, really modern structure that sits out on overlooking the water in Malibu Beach. And Kanye West is known for being, kind of a bit wacky. And he decided that he wanted this property to be completely self-sufficient and not require connections into the city, into power grids, into any of that stuff. He wanted it to be completely isolated, even though it's right in the middle of a line of properties and stuff like that. So he got this into his mind, sent in some contractors, strip everything out. I want all the plumbing out. I want all the electrical out. I want all those windows out. Stripped it down to a bare shell, and then got the this is what happens over in America. He gets this notification from the city council to say that, sorry, but what you want to do, not a chance in hell. You will never get permission for this. We just do not give permits for what you're trying to do. And so Kanye West, being himself, decides, okay, well, I'll tell you what I'll do instead. I'll bring my constitutional lawyer to City Hall and we'll go and get this thing sorted out. So he arrives in, and sure enough, he gets kicked out with his constitutional lawyer, and he's told, this is how we do it in the city, and take it or leave it. So Kanye West got a little bit upset about his plans being knocked over and decided to put the property on the market for sale. Now, he accepted that he had probably made a bit of a mistake stripping it. So it went on the market for sale at $54 million. He bought it for 56, put it on the market for 54. And the guy that bought it, he was telling me this story last night. He said that what happened was he was watching the property at 54 and he's like, nobody's going to pay 54 million for this property. It's been stripped out and it requires an enormous amount of work. And so what happened, the price suddenly dropped from 54 million to 39 million. So a $15 million price drop. And whenever you see a price drop like that, you have to move quickly, because if you see something like that, it's a sign of distress. And I don't know what was going on in Kanye West's life, but he decided that he needed cash and he needed it quickly. And so he dropped the price by 15 million straight away. And this guy that I spoke with last night, he jumped and he said, okay, I'm interested. So he contacted the agent. He said, I'm very interested in buying this property. And so what happened next was it says my connection is unstable. Hopefully it'll come back. So what happens anyway is he reduces his offer down to 21 million, and he makes the offer 21 million. And sure enough, Kanye West and his wife are away on holiday in Italy or Greece or somewhere like that. And they're selling off a load of assets at one time. And all the paperwork comes in and they just sign everything. And that's it. The guy bought it for 21 million. And he said that he went, got the original builders in, did some work to it. Not a huge amount though, because he said he spent 4 million on it. So he bought it for 21, spent 4, brought it up to 25, and he sold it for 30 million, and he's made a 5 million profit. Now, I was kind of thinking, geez, how did you raise the money so quickly and stuff? Is a peer-to-peer lending platform. And I know the founder in there, David Jelly. I've had him on the podcast a couple of times. And what they do is they're like a marketplace where they match investors who want to raise money from lending to house builders, and they match them with house builders. So you go in, you talk to them about your property deal that you're thinking of doing, and they basically say, they put it into a little package and they say, here's the development, we vetted it, we've had a look at it all, and you can raise the money that way. Now, you do have to put up some of your own money, so it's important to bear that in mind. You can never really get in free into these things. So I'm going to go back and have a look at some of the comments now coming in on TikTok as well. And what do we have? The first comment that I see: do you think now is a good time to invest in property or wait for the well overdue crash? This is a really good question, because, first of all, everyone's talking about when is the crash coming. And the problem is that the crash could be another 5 years away, or the crash could be in 5 months. Now, my own gut instinct at the moment is that with Donald Trump in power in America, and with him announcing tariffs and bombing Iran and all of this stuff, there's an element of instability in the world that would make me think that there's a bit of a risk that something stupid is done and something happens. And I think if that takes place, that's going to be what creates a crash. It's not going to be, I think, Irish people saying, hey, we don't want to buy property anymore because there's just so much demand. Like, we cannot build enough houses to accommodate the growth of the population, let alone the people that are coming into the country, let alone the existing demand that is just here in this country. So we're going to have a housing shortage for decades. But that's not to say that a global banking crash could not upset the situation for, a year or two. I think what would happen is suddenly it might become very difficult to borrow money or something like that. The people that already own property would probably be fine, but the people that are trying to do developments and things like that might suddenly find that there's no available capital for that kind of thing. And so that's the bit I'd be a little bit worried about. But that's to say, like, you could go and say, okay, I'm just gonna hold off and wait until prices go down, and they may not go down. And so, because you've got so much demand, the only thing that would drive them down is an external shock, and that, of course, is possible. But you're kind of on, you're hoping for something that's completely outside of your control to happen. So I try to do stuff that's inside of my control. And so I would be, as I encourage all the clients and guys that I'm mentoring at the moment inside the group, I would recommend to them all is just keep looking at the market, because you don't know what somebody is going through. Somebody might be going through a difficult time and they might need to get money. And I'm not talking about taking advantage of somebody that's in difficulty. That's the automatic assumption. People think, oh, you're going to kick somebody when they're down. No, like, we were just talking about this a few days ago with one of my clients, and he was trying to buy a property, and he offered this, the seller. He said, I'll give you whatever. I think it was, something like 600 grand is what the guy wanted, and he offered him 450. And the guy was like, it's not worth 450, it's worth 600 all day long. So the usual back and forth, giving out and everything like that. And so my guy said, well, look, if you ever, if you change your mind on the price and stuff, let me know. So anyway, this guy disappeared off with a 600,000, what it was worth in his mind, went off. And then about 3 months later, came back to my client and said, listen, is that 450 offer still on the table? And he goes, yes. Why do why is it so important to you to do it now? And the guy said, because I have another opportunity open to me. I have an opportunity to buy an adjoining property. So he owns another property somewhere, and the adjoining property has come up for sale, and he needs money desperately to buy this adjoining property to free up the money to do that. So he's not in desperate, he just needs cash quickly so that he can take advantage of an opportunity elsewhere. So suddenly the 600 dropped to 450, and there you go. That's how you find a deal. So keep on looking for deals. Like, if you say, I'm just going to stop looking because I know the market's going to crash and I'll wait for the market to come back. First of all, it can take 4 or 5 years from the moment the crash happens until the prices are at the bottom. So if we don't have a crash for another year, are you going to wait and sit on your hands for the next 5 years, waiting for the lowest prices, if that's what might happen? Like, it's kind of like living with this kind of view that the future, there will be something great in the future, but I just don't know when. So I think that's my advice on that. Sorry, it keeps on jumping here. So I was just about to read that comment and it moved. Okay, so what would an experienced plumber make per week, do you think? Well, I know from listening to a friend of mine that you should be able to do 500 a day, I think, is the amount that, if you're doing plumbing, if you've got a good plumbing business, if you own the business, you should be able to make about 500 a day. And that is, like, that's my friend Joe Doyle that says that. And I know that a few clients of his have finished doing his course and came straight to me to learn how to buy property, because now they were making the 500 a day. And so they were getting lots of cash in because they did the business. And now what they wanted to do was learn how to do property. So 500 a day is certainly what you should be doing as a plumber. Did you ever hear of a company called Mag Truss? We make roof trusses. No, but I just did now. So that's good. Mag truss. Well, roof trusses. Yeah. I mean, deliver them to site. 1 to 2 grand a week. Easy. Yeah, exactly. So that's, I mean, 2 grand a week would be your 400 a day, depending on if you're working 5 days a week. Okay. Is there any way we can get a call together? There is a way. Yeah. Like I do have private consultations that you can book an hour of my time. And that's a way to do it. That's what I did on Monday with a chap. So that's how you do it. It all depends why you want. Like if it's just for a bit of advice and stuff. The problem is, I get so many requests for this that the best thing to do is ask the question here, and then I can answer it here. But I get too many requests for a bit of a steer and a quick chat and stuff like that. So I usually just can't find the time for that. Let's see. Question here. What do you think I should do to get my first property? Because my plan so far is to try and get 2 smaller ones, one to live in and one as an investment and rent out. Well, you might find it easier to buy a house and split it up into rooms, which is what's known as, for a lot of you, you might have heard it, the HMO. And the HMO is a way to actually house hack, essentially, is what you're talking about. So if you've got a property and you're thinking to yourself, how can I get more rent from this, but I still need to live in it? And what you just do is, instead of renting out the house, you simply say, okay, there's 4 bedrooms. Every one of those bedrooms can put a door lock on it, and that's it. You just rent the room. Each room has its own, and then you share the kitchen facilities. Usually what you do is the sitting room. Nobody uses a sitting room in a shared house. So what you do is the sitting room becomes another bedroom. In fact, if it's a big sitting room, it could become 2 bedrooms. So it all depends on the layout of the house, because obviously everybody needs to have a window, and you need to be thinking about bathroom facilities and stuff. But we have guys inside our group. The client, one of my clients, has a business, and that's all he does: buys houses, turns them into HMOs, and what he'll do is he will add 2 bedrooms out the back into the garden. He'll split the rooms upstairs. If there's a high attic, he might even be able to create an attic room, and then he usually puts at least two rooms downstairs. So I know, I was in one of his properties. He did a beautiful job with skylights and stuff to bring light into the middle of the house and stuff. And he had, I think it was an 8-bed and 8-bedroom house. Now it depends obviously where you are, but 8-bedroom house getting 800 a week or 800 a month per bedroom. Like it's a pretty good income from that property, compared to if you were trying to rent it to a family or something like that. And people say, oh, it should be for families. Why should it be for families? Like, do 8 single people not deserve a roof over their head? Like, why is it that a family should come along and rent that same property? It's like, at the end of the day, people need property, whether or not you're a single person or whether or not you're a family. So anyway, let's have a look at some more of these. Okay, so we have, how do you sign a contract for a new house and then sell on the contract for a profit to somebody? So that's one of the things that I covered in one of my videos. I'm guessing that's why you're asking that. And that is much more difficult to do now than it was. So there was, back in the early 2000s, when there was a huge boom going on, what we used to do was, you would buy a property. If you got in really early, you would put down a deposit on a place, and you would say, take control of it, or not control of it. You would just get a place in the line, essentially. And then the builder might be building, say, 100 houses, and they put the first 10 up for sale, and you buy one of those 10. And then by the time they've finished the development, you haven't even moved in yet. You can literally say, hey, I have this property here at the front. for sale. Who wants to step in? And it's before you've even had to pay the builder. You would just literally say, okay, Mr. Builder, this man here wants to put his name in place of mine. And you would actually charge the guy that wants to take your place. You would charge him. And I can remember people were doing like, they were flipping these for like 20 and 40 grand and stuff. And then what happened was the game was up. And I can remember because it happened to a good friend of mine, and he himself and his wife were both doing this flipping of contracts, and they both bought an apartment in some place. They both put down their deposit, and then the market started to turn, and they sort of asked me one day, what should we do? Can we get our money back from the developer, do you think? And I was like, are you kidding? Like, the developer is going to force you to go ahead and buy that property. And they're like, what do you mean? He can't force. You signed a contract. Like, it is legally binding contract. You have to go ahead now, or you have to forfeit your deposit. And so these guys they basically, in the end, they spoke to the developer, and they said, look, there's two of us in this. If we pool our money together, we can buy one, and you let us out of one, we'll buy another, we'll go and get a mortgage and all that. So that's how they got out of it. But that, because of all of this messing that went on and stuff, it's been outlawed by a lot of people. And so a lot of the time, if you go and try to do that, the solicitors won't allow you. They will basically, the contract is with you. And another thing that was done back in the day was you used to do what was known as resting in contract. So back into early 2000s, stamp duty, this is going to be hard for a lot of you to believe that are buying these days, because it's like 1% at the moment or whatever. But back, every property that you bought back in the early 2000s had a 9% stamp duty. And so if you were flipping houses, the absolute last thing you wanted to do was have to pay 9% stamp duty, because what you were doing is you're buying a property for 100, you have to pay 109, and maybe you're selling it for 120. So the 9 is eating into half of your profit. And so what they did is they bought the property for 100, and then they told the solicitor, don't stamp the contract. So basically, the solicitor is sitting on a contract, and until it's stamped in the court, you don't have to pay the 9,000. And so what they do is they'd wait until they find the buyer who wants to buy it for 120, and then they would basically get the guy to go and stamp the contract. And so the guy would sidestep stamp duty, and all of that stuff happened. And that was, basically the market crashed, and all of that was done away with. So it's not really possible now, but we shall see. I'm going to see if I can find that comment there. So that's how what you would have to do now is get around. If a solicitor lets you, then you can do it. All you do is, when you sign a contract, it's only a contract. It's only a contract to purchase. It's not the purchase contract. It's only when you have the bank approval and all that you can go ahead and actually have the property transferred into your name. But when you sign a deposit, you hand over deposit, and it's a binding deposit. So it means that you will lose your 10% if you don't go ahead. And if you decide, I'm going to sell this to somebody else, it has to be accepted by the seller. Because if the seller says, no, I'm selling this to you, then, if he's not willing to accept that, then you'll have to pay the stamp duty and all that. When the house becomes ready to move in, yeah, that's the same thing. No point investigating now in the stock market, especially when Trump away. Yeah. Like, investing in the stock market right now, investing in anything right now, brings with it an element of risk, primarily just because of the uncertainty out there. Like, you've got war in Ukraine, you've got war between Israel and Iran, and you've got what's going on in Gaza, and now you've got Donald Trump throwing around tariffs and this trade issues with China and stuff. There's just so much uncertainty that a lot of investors are just opting to do nothing. And you'll see that we're seeing it in the larger transactions in the market, that whereas there would normally be a lot of large transactions with big institutions buying and stuff, a lot of stuff has slowed down to a, almost grinded to a halt. And it's because everyone's waiting to see what happens. Because like nobody knows with Trump, he's so inconsistent that he says tariffs for everyone one day with his big chart up on the White House lawn, and then the next week he says, okay, there's a 90-day pause. And then after the 90-day pause is up, which is in the next week or two, what's going to happen? And then like he's just, because he's all over the place, nobody knows what to do. So the best thing is just hold everything, invest, and just do nothing. And so you'd want to be pretty brave to go out and do that. The big thing is when you're investing, ask yourself the question, do you have the mental strength to take the ups and downs? If you do, then go for it. Invest in the stock market, because you might ride this wave and you might make some great money. But if you are a person who's emotionally like on a roller coaster when you see your money going up and down and stuff, if you find it hard to sleep at night and stuff, then it's not worth it. And I know people like when I went through the 2008 crash, like was horrendous. And I had this huge portfolio of property and like $1 million a year coming in. And like all of a sudden, overnight, it started crashing down. And I can remember I was negative 16 million at one stage. And like that was a really difficult time. Your family home is getting taken from you and everything like that. So going through that, I feel like having survived all that, I'm pretty strong. But I know that a lot of people didn't make it through that. They were going through something similar. And a lot of people just ended their lives and things like that. So it's pretty serious when things go badly wrong. So you got to be careful. You got to make sure you understand your own mental strength and whether or not, like, it's easy to say, oh, I'm very comfortable with risk. Yeah, that's fine to say that before the losses are there. But when the losses suddenly start to mount up and people are ringing you saying, I need this money, where's the money? And you can't come up with it, that's when you suddenly go, whoa, I'm in deep shit here. Like, how am I going to get out of this? And that's when you start having sleepless nights and stuff. So make sure you understand what your strength is. Ronan is saying, I heard someone on News Talk Radio saying some publicly traded landlords in China and Hong Kong are trading at 60 to 70% discounts to net asset value. Do you think they'd be worth a small investment? Honestly, Ronan, I do not think so. And the reason I say that is that property in China, like they built something like 55 million apartments in China. And like that's an overhang in the market of greater than the entire population of France. And that is the amount of vacant properties that are sitting there. And so I would suspect that even at 60 to 70%, you might buy it at 60. You might be thinking, oh, great bargain. I got it at 70% off, but you might never rent it. So what are you going to do with it? Like, you're going to have costs and upkeep and all that. You'll never be able to get an income from it. If you're in a block of apartments where everyone is trying to get their properties sold at, at a 70% discount, what's that place going to look like? Is it going to be well kept, or is it going to be in complete disrepair and things like that? I think it's important to think these things through, because once you've bought that, you now are sitting on a property and you might think, oh, okay, this was once worth, whatever it was worth. And now it's like, I'm getting it at the discount. The price that it was worth was possibly a false phantom price that was never worth that. And so these guys selling at 70%, they're selling at 70% of what they paid for it. But net asset value, that's a big, there's a big question mark around net asset value, because an investment is worth what somebody else is willing to pay for it. It's not what, a piece of paper says, because, fast forward and you can't rent the thing, you can't sell it. If you can't find a buyer for your property, then it's not worth what you think it's worth. It's only worth what somebody will come along. I saw somebody the other day on social media and bought a nice place in London. And London, beautiful places in London for sale. And he bought this apartment he says it was on the market for 450 grand. He went, had a look at it, immediately recognized this is not worth 450. This is worth 250. But the guy paid 450 for it. So of course the guy that's selling it wants to get his money back. And so he goes to the agent and says, I'll give you 250. And the agent said, I'm not going back to the client with 250. Like I can't go back to him with that low price. It's on the market for 450. Like 250 is not a serious offer. And the guy just said, listen, that they're not worth it. Just because he paid 450 does not mean it's worth 450. It's worth 250. I have the money. If he's interested in selling, he can sell it to me for 250, but he'll never sell it for 450. And so sure enough, a week later, gets the call. Yeah, okay, we'll take your money at 250. So you can do that in London. I'd be quicker to do that in London than I would go to China or and look at China, because over there as well, you're a foreigner buying in there, and some of you may be familiar with the story, but there's a guy, I actually went to school with him, Richard O'Halloran, and Richard was in China as an executive for an aircraft leasing company. And the Chinese, was founded in China, but it had a branch or a division or whatever in Ireland. And Richard was looking after that. And the guy in China did some sort of a fraudulent thing and went to jail. And so all of the assets of this entity were all kind of like caught up in this scandal. And so Richard in Ireland flew to China to go to the court to basically like say, listen, we'll sort it all out. We'll go and repatriate all the money. We'll get it. We'll go and dissolve, do it all correctly and properly. And the Chinese authorities said, you're not leaving. You're not going anywhere. And they held Richard. They took his passport on him. He wasn't arrested or anything. He was living in a hotel, but he was not allowed to leave the country for 2.5 years. And he has young kids that did not see him for 2.5 years. So incredibly difficult situation. And that's like, doesn't matter who you are, big executive in a big aircraft leasing company, that's it. No, we're not letting you out. So I'd be reluctant to invest in China, I'll be honest. So let's have a look at some more questions. Okay. 18 at the moment, starting an apprenticeship. I'm delighted to hear that, first of all. It's great to know that there's guys that like you starting apprenticeships, because you're few and far between. From what I hear, there's a massive shortage of apprentices. So well done. Looking to build a house as soon as I can. Any advice? Yes. First advice I'd say is to join a community. Like if you want, you're welcome to join my community. We have a group of young guys that are buying already at the age of 24 and stuff like that. And the reason I suggest that it's not like to make some money. It's actually just because if you're serious about it, it's the best place to be, is to be surrounded by other people doing it, because you'll learn so much from them when they talk about their problems, trying to raise money, how they're going about it, like all this stuff. There is a guy inside my group who left school at 14, went on to become, and he started working with his dad or his uncle in a trade. And then when he was old enough, I think he was 18 when he bought his first house. So very similar to you. And today he has a big, huge portfolio. Like he's done really, really well. And like that's because he got in, started early. He's smart. He's buying. He's always on the lookout. He's able to add value to the properties, and that's what he's done consistently. Just accountant here, no time, chained to the desk 5 days a week. You're on the ball. Yeah, that's what I thought, Shelley, and that's one of the reasons why I created my course for people like you, so that you can figure out how to find out how to create that passive income that'll let you unchain yourself from the desk. Rural planning law requires that you have a connection to the area. Yeah, that's true. What is the rule of buying more than 6 houses in one go to avoid stamp duty? So that's not actually the way it works. I think it's 10 houses in 12 months. So we were just talking about this the other night. The government, in order to stop these big investors coming in and hoovering up, like you've heard now, that funds are buying up entire housing estates. Ryanair bought a housing estate in, I think it's in Swords or something, and maybe there was something like 12 or 20 properties bought, and just Ryanair bought it for all their air staff and stewards and stuff. That is being prevented now by, instead of it being a 1% or a 2% stamp duty, it's now 10% if you go above 10. I think it's actually, is it gone up to 15? It's gone up to 15, I think, if you buy 10 properties. And it's not in one location or in one go. It's in 12 months. So that is not a thing anymore. Well, 6 properties, I think you're still below it. But definitely 10 properties in 12 months means 15% stamp duty. What would you do if you had 140K in cash? What would you invest in? I would probably, if you can get into commodities like gold, silver, things like that seem to be like, those are what's known as, now I wouldn't put the whole lot in, but if you want to go and just protect yourself, protect the downside, is you could go and take a lump of that cash out and buy silver. Like gold is already at the highest price it's ever been, but that's it, because it is what's known as a, what do they call it? They call it a sanctuary stock or a sanctuary investment. It's basically anytime there's uncertainty in the world, everyone just says, okay, put it into gold, because gold is very, very stable. Be interesting to see about crypto and things like that. The problem with crypto is that it's still a bit of an unknown in certain sectors, so they're probably going to be scared. But I would keep back some cash if I were you. I wouldn't put the whole lot into an investment, but gold and silver and things like that are where a lot of people are putting their money, just as a kind of safety haven. Let me see. And they print CEO on their business card. Yeah. So I'll dump it all into one property and try and get 2 mortgages. Very hard to get 2 mortgages. When you go to a bank, the bank wants security over that asset. And that asset is, if you're buying one property, then there's one asset, and the bank are going to require title deeds for that asset. And that's the collateral against the loan. And that's as far as they'll go. They will not allow somebody else to also have security on that same property. And so that's one of the reasons. So one property, one mortgage. And the only difference on that is if you're buying up a house that you're going to do up, then you might be able to go and get yourself what's known as a home improvement loan. So you get the mortgage and you get a home improvement loan, and that's where you're going to do this, get some extra value. Are American companies renting offices at the moment? Let's say East Point. No, a lot of them are not. And that is a big, I mean, it's not just East Point, but it is across the board. Since COVID, there's been a massive shift away from offices. People like to work from home and stuff. Where the big interest is now is in factory buildings and warehouses and stuff, because any business that requires a warehouse or distribution or factory floor or anything like that, people can't work from home. You can't work from home at a factory. But with offices, you've got a laptop in front of you. Yeah, I can work from anywhere. And so offices are badly impacted. Industrial and warehousing and all that is where it's all at now. Let me see. We say you'll need 90K, but I don't really know what that's about. The shoe shine boy, yeah, rule out what everyone else is doing. So how do I, oh, sorry, hold on a second, guys. It's verifying me. How do I educate myself on these strategies? Come and join my program. If you go and on my profile, I actually have a website page. Just look at that. And when you go in there, you'll see the various programs and stuff that I have. And there's education, there's all those strategies and stuff like that. All of that is there. So going down through the list of comments, what do you think of Wexford Town for first rental? Yeah, I've seen, there's a couple of guys inside the group that are based in Waterford and Wexford and stuff. And one thing's for sure, it's a lot cheaper than Dublin, and so it's going to be more accessible, we'll say, than certainly if you were looking at Dublin. How much investment is needed for planning permission and timeline to get it done? What are the people? Okay, so if you wanted to, when you say how much investment is needed for planning permission, it depends on the size of, if you're talking about a small residential project, it's not a lot of money. I think there's like a minimum charge. You'll find it if you just look at, ask ChatGPT or something, what's the charge for a residential project in Ireland, whatever county council that you live. So if you want to do it in a certain area, find out what the local council is for that area and ask. I think it was like €125 before, something like that. So it's not big money. But when you go into commercial, larger scale projects like commercial, it's on a per square meter basis, euro per square meter. And so it becomes substantial. I think the highest it would be, the figures have probably changed since I looked, but it was at one stage, it was something like 35 grand maximum. And so that's for the planning fee. Then there's also a fire certificate that needs to be gotten, various things like that. So if you're just looking at doing a planning permission for a house extension or something like that, it's small money, but you would need either an architect or you would need some sort of a drafts person who's able to do all the drawings required. In terms of the timeline, technically speaking, 8 to 12 weeks, but it can take longer if you upset your neighbors. And that's one of the reasons why in the past, what I've always done is, as a courtesy, I've gone into the next door neighbor and I said, listen, I'm doing, I want to do up the house. I want to do an extension out the rear. I'm very conscious that you're my next door neighbor and that you might have some concerns. So I'd love if you'd have the time, I'd come in and invite you in and show you the plans and show you what we're going to do and reassure you that it's not going to, impact you. Now, of course, you have to be able to say that if then you're going to show them a scheme that isn't going to greatly impact them. The problem is a lot of the time people, they just make this assumption that, oh my God, we're going to be overlooked with windows looking in on our garden and all that. And so they immediately jump to the conclusion and then they say, right, in that case, we're not going to allow this, and they object. And that drags the thing out. And that can be then a year. But I know, because I've just done it recently on behalf of a family member, and I think we got our planning within maybe 10 weeks, something like that. Just turn around. No objections from any neighbors or anything like that. So it's fine. The crash won't come for another 5 years, somebody thinks. Okay. No blue collar worker will ever own their house in the country again. Yeah, well, I see the smiley emoji, or the laughing emoji. So, like, the thing is you got to be, it's just speaking about the mindset of buying. If you believe that you'll never own property, then the likelihood is you'll never own property. But if you believe that, don't worry, I will figure it out. I have the ability to work this thing out. I'm determined. I'm tenacious. I'm just going to kick the door down until I get whatever I need to get this done. That's the mindset, the tenacity, the strength, the resilience that you need to have to make it happen. The first one's going to be the toughest. After that, it gets easier. And then you start to realize, oh, this is how it works. This is how it's done. Once again, that is the reason why I do think you should join a community. There's a couple of things that my mentoring programs are built on. They're built on education, so you learn stuff, but then there's also mentoring with me. I do this kind of thing. I do 3 calls a week with my private clients for this kind of stuff. And then in addition to that, so they all get their questions answered. And then we also have regular community get-togethers. So we actually meet together. Just did it recently and took out a hotel conference room, and I think we had 35 people at it or something, and we had 2 speakers. One was a tax expert talking about the best structures and how to minimize your tax bill, and the other one was talking about how to refurbish and rent houses and stuff. So that's the kind of community that if you get in with that community, you start sort of hearing, you'd be sort of scratching your head, I wonder how to do this. you talk to one or two of the other guys, and they'll tell you like, oh, what, have you tried this? And suddenly you're, like, I'll obviously give you the answer if I have it, but sometimes it's the guys in the group that are actually able to answer. So that's one of the reasons why a community is so valuable. 10 minutes left, guys. I've got 10 minutes until this is finished. So banks are throwing money out like the boom again, ringing me, offering me more to borrow. Well, Stephen, I'm surprised to hear that, because they are still pretty, if you consider just the way it was, like, they are pretty conservative by comparison. So I'm interested to hear more about that. What is the best way to circulate money within the property limited company? Okay, so if you have, like, what typically the structure that we would suggest is that you have a company that is your trading vehicle. So let's say you're a plumber or an electrician or whatever, and you go out and, as one of the guys said, you can make $2,000 a week or whatever. Let's say you're making $2,000 a week. That's $100,000 a year. At the end of the year, you'll have made $100,000. Now, if you are taking all of that $100,000 out for yourself, just to, to live off of, obviously you'll pay 52% tax on that. But if you've already got an income from something else and the $100,000 has come into the company and you don't need to distribute it, you have a couple of options. A, you can throw it into a pension, or B, you can lend it up, or you can basically pass it up to the holding company above. And a holding company is owned by you, your family, whatever, but the company that trades is below. The company above that owns it is a holding company, and it owns another company that sits over here, and it's like a brother or a sister of the trading company, and that is your property company. And you can lend money up and lend money across, and that is all possible to do inside of a group structure. But if you borrow, if you try to buy and sell inside of a property company, the problem with the property company on its own is that at the end of 18 months, any undistributed profit is subject to a surcharge on that. And so you'll pay an additional tax on that. And so that's the bit that you have to be careful of. And so the reason why you're better off having a holding company is because when you pay it up, then it means that there was no undistributed. You've paid everything up to the holding company above. So that's the way to do it. Obviously, if it's in a pension, then there is no issue because it's completely tax-free up there. Let me see. Do banks give money to buy land? That's a difficult one. The banks will not lend. Typically, they won't lend for just a piece of land. They might lend for a piece of land that has planning permission. And so, because with planning permission, obviously, then it's got potential for further value to be added. But a property with, a piece of land on its own, it's the price you paid for it is the price that it's worth, and there's no way to add value without the planning permission. And they consider that a bit too risky, so they'll give you the money after the planning a lot of the time. Let me see. Yeah, there is no banks lending money. Okay, we see one here. Try secondary lenders. Yeah, capital flow around JV. Yeah, what you should probably do is speak to a mortgage broker, because mortgage brokers, they will know all of the niche lenders as well. And so if you go and work with an independent mortgage broker, they have lots and lots of relationships with all of the different lending companies and stuff. Property as a pension investment, do you need a company to facilitate, or can it be done yourself? You do need a company. So this is one of the reasons. The way it's structured is that you have to set up what's known, maybe the name has changed, but when I did it, it was called a self-administered retirement trust. And what it means is that you're creating this entity that sits separate. It has its own trustees and stuff. And you can transfer funds from your business, as long as you're one of the directors and you're a shareholder or whatever. You can transfer funds from the profit and loss account over to your pension, and the profit and loss account falls by that amount. So if you have, let's say you have 100,000 profit in your company, you will have to pay 12.5% tax on that this year. But if you put all that 100 into your pension, your company pays no tax, and all that 100 is sitting in the company in your pension now. So you can invest that however you please within certain rules. Like you have to work with trustees and stuff. The trustees will not invest in anything in which you have some sort of an interest. So you couldn't sell your own home to your own pension and then live out of it. Like that would be considered not an arm's length transaction. It has to be arm's length for the banks to agree, for the pension trustees to agree to it. County Meath is supposedly to supply the biggest solar farms in Ireland. Would this deter you from buying here? No. Let me see. Okay, Gavin, what are your own property goals for the coming few years? Well, it's funny you say that. I have a villa in Spain, and my tenant, I have a tenant living in the property for about the last 5 or 6 years, and he just told me in the last 2 days that he is now he's going to give the property back to me next month. And so now I have this beautiful villa coming back to me. And so my immediate goals right now is what to do with that property, because I see it now as a big opportunity to maybe turn it into a really high-end Airbnb. And no problem. Thank you saying thank you. So my idea is I bought this beautiful villa back in 2008, and I bought it at the top of the market. It fell, and I've hung on to it. I've paid the mortgage for all these years and stuff, and now it's actually come back, and it's actually worth more than it was during the crash. And so it's actually back now above what I paid for it, I think, for the first time in, what is it, coming up on 17 years. So the thing that I'm trying to decide now, what am I going to do with that property? Am I going to do it as an Airbnb? Because then I can avail of it. The Spanish system it's a socialist government over there, so it's quite difficult. Like they have tenants have a lot of rights, a little bit like Ireland. And so you can't do short term with a tenant for like 6 months or a year or something like that. You have to do 6-year kind of thing. But you can have it as a tourist sort of turning around every weekend kind of a thing. So I think to myself, what can I do now? So my immediate focus is on just that specific property, do it up, get it really nice, get it churning some income, and then possibly do more and more of that. And what I have this idea to have a kind of a portfolio of really beautiful villas in different parts of the Mediterranean, so that you could have a situation where you'd have like a website and you could choose your beautiful villas all over the place. That's kind of like I'm not looking at doing much in Ireland unless it's commercial. When it comes to residential, I prefer the nice villas and things like that you see abroad, Right, guys, we have 1 or 2 minutes left. And let me see, last question. We own a small company with 460K in the bank, no debt. What's the investment at the moment? I would say you should contact me, because I'll give you an example. I spoke to a guy on Monday who is in the motor trade, and he is operating out of a couple of units. And just by talking about the price that he's paying versus what it's worth, versus what his company could afford and all that, like there's so many transactions that you can do with a bit of paperwork that is able to create value, and you can end up owning the asset that your business is trading out of and all sorts of stuff. Like, this is why I need to understand, like, what are your skill sets? What are you doing? All that kind of stuff. So you should reach out if you want to have a conversation. Like, what can I say? Like 460 grand, go and buy a load of XYZ. And I just don't think that's the way to dole out advice. You're better off understanding what's the objectives and stuff like that. Do you need planning permission for HMO? No. HMOs are this kind of weird gray area. And the gray area means that it's actually not covered by law. It's not covered by the Planning Act. It's kind of seen as sharing your house. but it is a gray area and there is some risk attached to it. So can you write mortgage repayments off against tax only if you're registered with the RTB? I feckin' do remember paying 75k madness back in 2003. Yes, indeed. Anyway, guys, I'm pretty much closing it off now. I'll ask the final question. Is it better to flip property quickly or invest long term? I would say long term. Like you might get lucky. The best deal I ever did, and this was a once in a lifetime deal, is I bought a property in Clondalkin and I paid 1.25 million for it. And it was a commercial property and I wanted to do it up and I wanted to put a pharmacy on the ground floor and a doctor's surgery upstairs. And so I bought it for 1.25, and within about 2 weeks of buying it, I was approached by an agent acting for a financial institution, and they said, Gavin, are you the new owner of that building? And I said, I am. I said, what are you going to do to it? And I said, I'm going to put in a pharmacy and a doctor's surgery and blah, blah, blah. And they said, listen, these guys were a bit slow to the market. They wanted that property. They didn't bid on time. You're now the owner. We need to buy it from you. How much do you want? And within 6 or 8 weeks, I think it was 6 weeks, I sold that property for 3.7 million. I mean, big, huge financial institution, 2.5 million profit. It was just crazy. And that was 2005. Like that was the absolute, that's 20 years ago now, but that was the most incredible deal. 6 weeks to do that kind of turnaround. It doesn't happen. So I don't want to give the false impression that that's the kind of thing but you can find, that's a flip that's worth doing, obviously. But a lot of people will get into a flip and they'll suddenly realize that there's a lot more to it. And suddenly, you can get caught in the flip. And that's the thing you have to be careful of. All right, guys, listen, I see loads and loads of comments. What I'm going to suggest is what I'll do is I'll save these and I'll actually do another video, but I need to go now. So nice to see you all. Thanks again for joining, and catch you next week. All right. See you guys. Ending, and ending.